the future of the cryptocurrency exchanges, the future of DeFi. We'll unravel it all with Lennox. Lennox, welcome to the show.
Thank you for having me. Very nice to meet you guys.
Lennox, you are part of OKEx, one of the most trustworthy and, quite frankly, one of the most highly growing crypto exchanges around. Could you please tell us a bit about your role and your responsibilities at OKEx?
Yeah, sure. My name's Lennox, and I've been working here and co-founded OKEx for almost 4 years. So right now I'm currently responsible for international developments for OKEx, as well as covering many aspects like product development, business development, institutional development, and regulatory developments on OKEx as well. So very happy to have me here on this show.
Happy to have you here as well, Lennox. Quite frankly, I think you're at the right place at the right time because the regulatory environment right now is insane. And having a head of a cryptocurrency exchange is valuable. So could you give us your insights? What is the overall feeling of various cryptocurrency exchanges and your feeling of the regulatory environment globally right now?
Yeah, I personally feeling that a lot more comfortable than several years ago when we first started OKEx, because back in the time we had no regulations, and we kind of stepping into regulated or unregulated, kind of like the gray area. And when we trying to talk to the regulators, it's very difficult to us because the industry was very small, and we don't have substantial content to talk to the regulators, and the regulator doesn't have a clue of how to regulate these kind of industry. They think, hey, some of them are scam and Bitcoin is unproven. But I think after several years of crypto development, especially Bitcoin and Ethereum, the government starting to pay attention. That's the reason that I feel comfortable and confident, because most of government right now in OKEx level, we literally see that those regulators trying to pay more attention to this industry already. Some of them take a different approach, obviously. Some of them are a lot more hostile, some of them are welcoming and supportive. But it's okay, you need to take attention so that we can have an in-depth discussion with the regulators.
But isn't that attention to a bit of a double-edged sword? So at first it was kind of a sandbox, you basically exchanges, crypto projects just did what they wanted. And now it's such level of scrutiny that, especially from East Asia, some parts of Europe, the US right now is showing various signs that they're gonna take a harder stance, Janet Yellen's comments. So, but you're still feeling comfortable. I mean, I did not expect that. And
the feeling of comfortable, because it looked like when back to several years ago, it looked like we're heading nowhere when we think about regular. Now we have more clarity in terms of, like, this government of regulatory is not supportive to crypto or even hostile. They want to ban it at hardest possible. On the other hand, some of the government would, hey, let's start from really small scale. Let's add some element that we understand. So let's try to work together. This kind of attitude, our business scale or business limitation, we need to do a lot more harder work and add a lot more costs and compliance just to fulfill those kind of regulations. But imagine an OKEx back in 4 years' time. We need to spend millions of dollars just to hire a lawyer and trying to figure it out. Hey, could we operate in certain jurisdiction? And turn out the answer would be half. Maybe you don't know. It's not clarity give us confidence and comfortable.
Yeah. So for the regular crypto user, potential OKEx user, the fact that OKEx right now is putting its best leg forward, so to speak, you are investing heavily into, as you say, lawyers, trying to get your ducks in a row. And basically, as far as I hear, you're doing everything right to be with the regulators, and you see this as a positive development. But what about the future? Could you give us any insight, Lennox? What's going to happen? Will we have a divide between countries who simply are against crypto or are ambiguous to it or completely embrace it? Or will it be more of a, in later years, everyone will embrace it? What's your point of view?
There will be several levels of embrace or endorsement from the regulators. I think the best one, I would say, would be supportive in a way that setting up a separated regime, licensing regime or regulatory regime just for crypto industry. That's the best one, because I think there's a really very unique regulatory aspect on just crypto industry. For example, like DeFi, for example, KYC in the open source protocol. That is very different than all the financial instruments. The second level of endorsement might be trying to fit in crypto assets into the existing regulatory regime. For example, in US might be, they think the Bitcoin or Ethereum is just a form of commodities. So putting commodities, putting crypto assets or Bitcoin under the regime similar with regulating a commodities. That's still fine, right? But still, you're putting the existing regulation onto very frontier access. It's not perfect, but I think it's a start. The final part will be completely being very hostile and non-supportive to crypto. So eventually you will see globally we have different areas that are from super supportive with a very friendly regulation to some of the jurisdictions who are really hostile to crypto.
So basically, right now, the future outlook is positive, but we'll have more regulation, more diverse regulation, as you say, levels. However, at this moment, which countries would you think are most friendly to crypto and which aren't from your user data? What could you suggest right now?
That is a lot of jurisdiction that's considered supportive. For example, like Singapore, for example, like even US, I think is can consider comparatively is relatively supportive.
Oh, okay.
Crypto development, despite the fact that they're having a lot more increased scrutiny, but you have some more clarity in trying to think what's the best way to regulate, rather than hey, if you hold crypto, if you're trying to, you need to be taxes, you need to be bank, your bank cannot open the bank account, you cannot operate a business over here. I think that is the attitude. Yeah, you can have a really strict rules and regulation, but that we can still consider as supportive.
Absolutely. Now, I would like your opinion, since you're in the unique position of DeFi. So, as you're operating an exchange, how do you view DeFi at this moment, at this current juncture? The DeFi boom kind of happened during this year and the beginning of last year. So, can you give us an insight as to how you view the rise of DeFi?
I think the DeFi right now is already developing to a stage that becoming one of the most proven apps or application that running on blockchain. It's the most viable use case other than Bitcoin. So imagine when we talk about blockchain, they have no use case. Then Bitcoin starting to come over. Hey, Bitcoin is okay, right? Using blockchain technology, so you can transfer money everywhere in the world. Bitcoin. So right now, Bitcoin become the digital gold. So the second phase is the usability of blockchain tech is actually DeFi. We're starting from DeFi is a really big concept. We're just starting from a boring lending. So imagine a bank, right, working a really simple, boring lending arrangement, but it's put in on blockchain, completely decentralized. Then we're starting to evolve, right? From a bank, we evolve adding financial derivatives, different kind of yield farming elements or different areas. We got decentralized option, decentralized derivatives, and on a decentralized order book and trading venue that all utilizing blockchain technology. So you cannot say you have zero use case in blockchain anymore because we got DeFi, and that's proven.
Correct.
The TVL, the value that locked in DeFi protocol right now reaches 200 billion. So it's getting higher and getting higher. It's already proven. It's loved by global users.
Absolutely. But I have to play devil's advocate here. Our viewers are very critical and they'll ask themselves, okay, so now most exchanges that claim they are decentralized, well, quite frankly, have quite a bit of centralization. Right now, the only true commodity really decentralized is Bitcoin, and even that was a question before the China situation erupted, right? So, what do you say to naysayers that say, okay, DeFi is here, but wait till the regulators come, and DeFi will have to morph into something which has to comply with the current regulatory standards, thus losing some of that charm, that electricity, so to speak, those additional features which it would have offered, that less KYC, more privacy. It will kind of have to comply with current KYC standards. What do you say to that?
Yeah, I think eventually DeFi need to fit in the current KYC. So yeah, the decentralization of the business model itself is work. It basically trying to put a peer-to-peer transaction on chain, substantially lower the cost in terms of, overhead cost and operating cost in terms of borrowing and lending. So it's work is provide is a unique value proposition by reducing the cost involving financial transaction, but you still need to be KYC. You still need to be fighting anti-money laundering. So I think it's okay to have the KYC element and the AML element to be integrated into DeFi or the current DeFi protocol, and also but it doesn't really change the benefit of using DeFi. It just make it even stronger. For example, like Bitcoin, right? Bitcoin is tend to be anonymous trading, a lot of kind of like anti-money laundering involved. There's a lot of scam involved when they get started. But if they starting to get endorsed by the regulator, hey, for example, like CME, they list the Bitcoin futures. And for example, a lot of regulators, especially in US, hey, think you can have the ETF for Bitcoin. Then the institutional money starting to endorse these asset classes, and the Bitcoin, because of this reason, they go even bigger because of added regulation, because of added element of the regulation.
Yeah. So you're speaking wise words, and I think people have been too adamant about opposing regulation, but there has to be a middle ground somewhere, right? And what DeFi applications right now excite you the most? Because there are so many, but which ones excite you the most? Did you think have the most explosive potential right now?
Yeah, I think the most exciting thing is not a single business or single apps to me. I think it's how interact with different DeFi features or protocol, I would say. I'm not sure if familiar term with DeFi Lego. So imagine you have a bank, you go to a bank, they have a different kind of element. You got credit card, you got mortgage, you got different kind of things. But right now, what we're talking about is we break down the bank features and service into small pieces, and you can just think of that with Lego and mix and match to maximize your yield and to minimize your borrowing yield or lending yield. So that's only available and happens on DeFi. The thing about DeFi is a piece of different kind of Lego elements for you to mix and match freely, so that you can create your own best fit financial product that only fit your own.
True. And talking about mixing and mashing, NFTs, GameFi also can be seen as beneficiaries of the DeFi boom, essentially. So, as I know, OKEx is doing something with NFTs and GameFi. Could you tell us a bit more about it?
Yeah, because we think of GameFi and NFTs are one pieces, and GameFi might be a very important and I would say a very disruptive business model for existing gaming industry. We talk to a lot of gamer developer. One of the challenges of being a gaming developer is the return of capital is so huge. You spend substantial amounts of initial cost and money and capital to be invested to make a beautiful game, to make a viable game. So what GameFi is actually disrupting is to, hey, why not you have a great concept, you make a really simple prototype, you assemble your team. The next step is trying to sell your in-game inventory or material, in-game token on-chain first, that as a form of raising your capital for developing your
Interesting.
The investment cycle and the risk for running a game studio. So you can see the gaming industry right now is heading towards an idea that only the biggest capital win. So if you want to make a AAA game, you need to spare and you need to find investor for several millions of dollars or even 10 million in order just to get started. And you expect your return of capital after 3 years of the game, even 5 years or even 8. That you're starting to recruit part of your investment, and that's the only one-time thing, because you only sell one piece of your game for causes, and you cannot sell a subsequent income. It's very difficult to sell subsequent income anymore, but by building in-game ecosystem. But GameFi is actually building an in-game ecosystem that encourage player to directly contribute to the game and trade and play against another player. The gaming industry, gaming developer look like maintaining a market, an ecosystem, and the DAO, decentralized organizations. Their goal is to maintain a fair and tradable gaming ecosystem for gamer itself. So I think I would say it's a different way to take a look at the existing industry, and it could be disruptive. So I think what OKEx is doing right now is basically we have a chain, we have a protocol that really supportive to GameFi, and it's tailor-made to GameFi as well, because we substantially lower all the costs in terms of transaction costs that related to GameFi. So I think it would be very interesting to see how it goes, especially for the gaming industry.
However, the flip side to that, and our viewers do expect us to ask the nitty-gritty questions. GameFi is a kind of it seems like many a times, it's like a gimmick, or it's like a rug pull. Or in many NFT projects right now, unfortunately, almost every day we cover a story of a rug pull, of a project that raised money and ran away. And do you see this as a big issue, that essentially there are a lot of people seeing the amount of capital coming in, using that capital, and then just, escaping of all the dough, essentially?
Yeah, I think that was still happening. I think it's almost like participating in all the early stage ventures. You can expect that all the interesting new concept out of 100 new concept, and you can like stop, right? 90% will eventually fail. So that is the risky element. That's the risk part. So even you have a dedicated team and very heavy resources that have committed to certain projects, I think a majority of them will doom to fail. That's just like that's the skill of the investor manager as well.
Yeah. So the question would be, as you yourselves have heavily invested into GameFi and actually helping it grow, how do you pick the right projects? What do you see as the formula for them to be successful? Could you share with me and the users at home? What is the formula for a successful GameFi
Yeah,
project?
I think you cannot. I think there are many teams that's trying to participate or make a game that look like GameFi. But I think you shouldn't, as a game developer, you shouldn't just trying to completely 100% migrate your existing game that's serving the traditional gamer and convert it into and add some blockchain element and make it yourself as GameFi and trying to raise the money. You have to understand what tokenomics that actually benefit your gaming ecosystem in the long term. You have to understand that very, very unique element. You cannot just, hey, I just make the same game, MMORPG, free-to-play game, and all the in-game currency just make it on-chain. It doesn't work. It doesn't work like that. You have to consider, hey, if I add a certain tokenomics within this game, how could I encourage more gamers and more free-to-play gamers to eventually benefit the entire ecosystem, gaming ecosystem, and think relatively balanced mechanism.
So it's almost sustainable gaming.
Correct. You're getting blockchain is just one kind of technology. The technology is basically, in simplest form, it's just a very cheap settlement system. But eventually, you need to think about the economy inside. How to make it sustainable. You cannot imagine a big player, a whale, some gamer just trying to buy a big chunk of an NFT, then win everything.
So the current, so parting words are, as you see the current ecosystem of both DeFi, the NFT ecosystem, the GameFi emerging ecosystem, what makes you the most excited? Maybe 2 points, and 2 points that make you feel a bit uneasy. Could you share those with us?
The current growth stage, the growing trend in terms of the valuation as a whole, I mean the endorsement on Bitcoin to really mass market, really mass audience to stock broking area, I think is comforting. And the growth of DeFi in terms of total value lock is really healthy right now. That's the comfortable part. The alerting part is a lot too. I think there's several elements. The first element is the people somehow underestimate the risk of playing around DeFi Lego. What DeFi Lego actually means that you stake in certain protocol and you create a smart contract, you got a liquidity contract, and that particular yield-bearing, interest-bearing contract, you can stake in somewhere, migrate some other protocol and earn another product, and you can add layer different and layer onto different protocol and multiple yield. So it looked like an asset-backed securities. To me, back in EDS.
Yeah, it smells like one, it talks like one.
So eventually, if Bitcoin or if you, I mean the underlying assets that you stake, maybe USDC, maybe Bitcoin, Ethereum, that having a really big crash, we might see a Casade regulations, especially on DeFi in many areas, because it's look like CDS, right? Different kind of layer, and if you add different kind of layer, and you only take a look at the really high APY, you might underestimate the risk of the underlying asset. What your APY is actually current backing on something. If you're current, it look like a derivative on a derivative and have a derivatives. So if the market crash, so it as a whole, it look like. That there will be a very highly leveraged element that involves risk that we cannot fully understand at this point in time.
Yeah. So it really does it remind you in any way of 2008? What happened in the traditional financial market?
Yeah, actually, and the visibility of the risk is relatively difficult to calculate. Yeah, we can see that from one protocol. We, for example, like MakerDAO, we understand that if Ethereum drop to certain level, the collateral are gonna be liquidated, but we cannot easily to have visibility of if those kind of Ethereum got liquidated, how many protocol were gonna be affected or impact, and they going to be liquidate even earlier. And what kind of casada liquidation that we will see, how much money we having, how much capital they lost. And it's difficult to grasp all those kind of piecemeal information and understand the full spectrum of the risk. So I think that is one element that maybe it's too early to say, but I think is a little bit alerting to my farmer. You have to pay attention on that. And
absolutely. So OKEx is one of the biggest cryptocurrency exchanges. As you mentioned before, top 5 in terms of volume and user growth. So if a person wants to, could we help out a person to kind of differentiate between other crypto exchanges? What are the, you would say, the 3 biggest benefits using OKEx?
Yeah, I think OKEx is very, very, very focused on product and tech. So on the surface, it looks the same. On Binance, so you can still buy the crypto. You have all the elements, all the financial instruments that you can play around with. You have DeFi. Those kind of elements we look the same. But if you look deeper, as a professional player, you kind of like recognize the difference. Deeper means that if we compare the capital utilization on different exchanges, I think OKEx is one of the best exchange in terms of capitalization, meaning that with the same capital, you can trade even bigger and having bigger position size when you trade OKEx. Because OKEx has so many years of risk management, and we have performed no margin, different kind of margin calculation. That's what we spend many years to figure it out. And that is one of the advantage. The other advantage with we have a full fledged of crypto related instruments. So for example, we got spot, we got all kind of derivatives, including option. Option is the holy grail. I think it's the holy grail of financial instrument, because it's very difficult to develop and that's one of the edges. You can trade everything and execute all kind of trading strategies on OKEx.
Fantastic. I mean, it really clarifies it for me and hopefully for our users at home. So this has been the Flipside Crypto interview. Please check out OKEx. We shall link in the description down below. Thank you, Lennox. It was my pleasure.
Thank you.
See you in the next one.